What happens this Sunday in Arizona will have a solid impact on your stock portfolio, and it has nothing to do with how much cash you may have taken out of your bank account to wager on the Seahawks or the Patriots. We'll get to that momentarily. Let's welcome back the Newsmax Director of Financial Newsletters, Bulls, Bears, and Bucks for Friday. Jeff Yastine joins us. All right, Jeff, let's go ahead and dive in here. I love this story just when I saw it. 50% of financial advisors feel optimistic about the economy, which means 50% of financial advisors feel pessimistic about the economy. Just wonderful how we cut this right down the middle, and nobody really knows what anybody's thinking here.
Yeah, there are statistics and damn statistics, I guess. In this case, I think it's probably a good sign if only 50% of advisors, financial advisors out there, are optimistic about the economy. That's probably a good sign for the economy. It means that expectations are still fairly low despite some of the good things that are going on in the economy regarding lower energy prices, which we've talked about, lower interest rates, and consumer spending, which has been picking up by and large through the various quarters.
What's the takeaway now? Let's get to the numbers on the U.S. economy only growing 2.9% in the fourth quarter.
Yeah, my take on it, and from what I've seen of other, I'm not an economist, but from economists that I've read, it's actually probably a good sign. Again, there are tailwinds going on to the economy, which should help things going on in terms of employment, et cetera. But to have something like the fourth quarter GDP come out at, not the 5% that we saw in the third quarter means that the economy is muddling along, doing okay, and may help convince the Federal Reserve to hold off on raising interest rates, which I think is what we'll hear more and more about from Wall Street in the next couple of quarters, and especially if we see more of these kinds of reports. Again, an economy that's not growing really fast, but isn't shrinking either. Those are good things. It means the Fed stays on the sidelines. That's what Wall Street's paying attention to.
When the Fed looks at consumer spending on its fastest pace since 2006, what kind of effect does that have, knowing that consumers are at least spending money and looking to spend money? Any effect at all?
I think they take that as a good sign, because it means if people are out there spending, then that actually provides an encouragement for business investment as factory owners and others look to the increasing orders they have and say, hey, we got to ramp things up and either get more productivity out of the workers, hopefully pay them more, and produce more supply for the increased demand they're seeing from consumers.
A couple of gas stories here. Chevron, according to their newest reports on the fourth quarter profit, 30% bite of their quarterly profits, 30% bite out of the profits. And meantime, no slowdown from OPEC in January. They are still pumping oil, right?
Yeah, the OPEC news I thought was interesting. It's not a surprise to anybody, but just before I came in here, I was looking at the weekly production figures here in the U.S. from all the shale drillers and all the other companies that have rigs and platforms in this country. And it's fascinating. Right now, as of last week, we were producing 9.2 thousand barrels a day, which is still higher than it's been in many, many months. Compared to a year ago, we were producing 8,000 barrels a day. So likewise, in this country, we continue to see, despite the lower oil prices, we continue to see oil production levels continue to rise. And again, OPEC's doing it as well. To me, that seems to point towards yet lower oil prices and come what may with those impacts.
Got about a minute left here. NBC announces it sold all their ad time, $150,000 a second, just to air a commercial. They certainly don't expect any real return on this. This is all, I think, in many instances, just part of being part of the Super Bowl and hoping for a little ancillary effect down the road.
Yeah, I agree, Ed, because you see where they bring the Today Show and all the other various components of Comcast Universal and use that as a platform to bring them all out to a wider part of the public that may not get a chance to sample those shows. And it's a media event. Where else these days in this media environment can you get all those eyeballs from TV viewers in one spot? There's just no getting around it. I think they sold it's like about $4.5 million for a 30-second spot, which is still, according to published reports I saw, that's about $500,000 more than what Fox got for last year's Super Bowl. They were, in published reports, getting about $4 million for 30 seconds. So
all right,
I guess that points to a good thing.
Few seconds. The Super Bowl predictor says They've been right 39 out of 48 times, 81% accuracy rate. If the NFC wins, it goes up. AFC wins, stock market goes down. 5 seconds, who do you like in the game?
I guess I'm going to say I want the NFC. I want the Seahawks to win, but that's because I want a bull market.
I was just going to say I knew it had to be connected somewhere to the market numbers. By the way, don't forget, get your copy of the Warren Buffett Next Door book by visiting FIR411.com. Go to Newsmax.com and Money News to get everything you need there. Jeff Yastine, thanks a lot, my friend. Have a great weekend. We'll see you next week, and MidPoint will continue.